We have entered the last phases of our monetary system, and the bottom 1% will reap the benefits of these reduced rates, since asset prices will stay inflated. People need to wake up. Who is the source of the gold that is entering and exiting the exchanges? The people closest to the information are the insiders, so to speak. Consequently, insiders are selling stocks and purchasing commodities, while the general public is putting their money into stocks and ignoring commodities altogether. The affluent have more money and easier access to information, which is why they grow richer while the poor get poorer. And silver, that hushed, unnoticed metal, is being subtly set up to burst. The parts fit together in such a way that it's impossible to dissect. Millions of ounces are taken out of circulation by an anonymous buyer. The credibility of paper silver diminishes. The demise of the dollar is becoming mainstream. It's a plan that's being put into action right now. The dam must eventually give way. There may be a financial meltdown, a geopolitical crisis, or just a shortage of silver to satisfy demand. And once that occurs, computers and charts will have no say in price discovery anymore. Panic, scarcity, and the nitty-gritty of supply and demand will be the driving forces. Is $1,000 the price of silver? Guesstimate remains a mystery. However, this is what is known to us. The systems that have suppressed silver for many years are now malfunctioning. It is being propelled upwards by the force. There has never been a time when monetary anarchy, industrial imperative, and sovereign accumulation were so powerful. It's not a guess. There's no way around it. Now is the moment to remain informed if you have reached this point, because silver's future is going to change everything. Make sure you subscribe and join the conversation. Keep in mind that I am not giving you financial advice. You should never make a financial choice without first consulting an expert. It's leading to capital and resource misallocations. Furthermore, we have encountered this issue time and time again. Also, that doesn't allow the market to decide how much money costs and what interest rates are charged. However, the bankers are tardy because they believe they know best. To my mind, it is unacceptable to do that even now. This is the issue that has us trapped. This is something they feel compelled to do. But basically, we're just going to make everything more distorted. Rising asset prices will allow the already wealthy to amass even more wealth. Business is moving at a snail's pace. People on lesser incomes or who have already lost their jobs can expect to see asset prices soar and the cost of basic necessities skyrocket. Poor people will have a tougher time putting food on the table and getting to work because they do not own assets, while the rich gain richer because they do. Inflation will rise and the economy will continue to lose employment. The BLS, or Bureau of Labor Statistics, ought to be known simply by that name. That is ridiculous, stupid. The public has been led astray for an extremely long time by the statistics that emanate from that source, be it unemployment or inflation. On top of that, the inflation figures they're giving us are substantially higher. I expect you to be aware of this. Dad is aware of this. We have already covered shadow statistics and John Williams. He has appeared on your show and has informed us that inflation is more like 11%, not 2% or 3%. Once again, the Producer Price Index showed rising inflation last month. And this is what, in reality, is going to set off a chain reaction under the cost of living for the typical American. For the typical American, it will not be very helpful. What it will accomplish is help the wealthiest 1% of the population. The industrial sector adds fuel to the flames right when you believe the strain couldn't get much worse. Silver has several uses beyond its monetary value. An industrial workhorse, it might be said. Additionally, the demand for solar panels, EVs, 5G networks, and high-tech gadgets is currently at an all-time high. Not investors, but manufacturers, in a mad dash to get their hands on real metal, drove the more than 10 million ounces delivered on COMEX in July 2025. Why? Reason being, they are prepared. There is a tightening of supply networks. Stockpile safety nets are getting thinner. Furthermore, delays are already manifesting in actual manufacturing. Silver is being eaten alive by solar energy in particular. Governments throughout the world are imposing strict green energy regulations. driving up the demand for photovoltaics to unprecedented levels. In addition, high-efficiency solar cells cannot function without silver, unlike other materials. So, producers can't simply change gears. No matter the price, they must acquire silver. An industrial demand crisis on top of a monetary panic is compounded by the exponential expansion of electric vehicles, which use significantly more silver per unit than combustion engines. Worryingest aspect, the supply side isn't keeping up with the soaring demand. Important areas have shown either no change or a decrease in silver production. Major mining companies have also issued a warning, stating that production will be limited for years due to grade depletion and underinvestment. The COMEX and other above-ground storage layers are thus the last line of defense against supply disruption, and both are being depleted at a rapid rate. Investor inflow took precedence over industrial demand during previous bull periods. On this occasion, though, it is taking the lead. Investors are vying head-to-head for the remaining supply, while industrial users race to avoid the impending shortage. The buffer has been depleted. Industrial necessity and monetary survival are about to clash, and the market isn't prepared. According to market insiders, this is how prices rise and fall. Always at the head of the pack are the insiders. The insider's wealth is more than simply financial. It's not fate. The information is also accessible to the insiders, and that is of utmost importance. And if you grasp the material and notice that others who do as well are heading in a particular route, then you ought to be following suit. The contrarian indication has been a major topic of my recent discussions. In case the fewer viewers haven't heard me say this a million times, let's review it again. To those who have, my deepest apologies. However, hedge funds and other insiders are selling off their stock holdings. Since June, the managed fund has been selling $2 to $4 billion weekly. The amount of cash on hand for Buffett ranges from $4 billion to $500 billion. Since the start of the year, there has been an insider buying to outsider selling ratio of 7-1. 3 or 4 of NVIDIA's most prominent board members are also very wealthy individuals who have sold more than 1 billion shares of the company's stock. Bezos has sold more than $6 billion worth of Amazon stock since June 1st. There are insiders selling at the same time as the public, and everyone is extremely invested in stocks, more so than during the dot-com bubble and the great financial crisis combined, at a level of roughly 54%. If that weren't terrible enough, they also have the biggest allocation to options and the highest allocation to margin play, both of which are over $1 trillion. Speculation, leverage, options, and margin signals in this context. As a result, everyone is betting on margin and leverage. The insiders are also departing. However, turn it over to the opposite side. As you pointed out, the general population isn't very enthusiastic about the commodities either in terms of knowledge or allocation. However, what's happening on the opposite side of the fence? We have never seen such massive COMEX delivery as yours. The United States is now a net importer. Who is the source of the gold that is entering and exiting the exchanges? The people closest to the information are the insiders, so to speak. Consequently, insiders are selling stocks and buying commodities. Additionally, the general population is firmly invested in stocks and has no business touching commodities. In what ways could things go awry? What I want people to remember is that this is the reason why the wealthy always come out on top. They seem to appear just when no one else is thinking about it. And when the general public finally figures out that the insiders have been well positioned for quite some time, they will likely begin searching for their next amazing value that has gone unnoticed. Because the wealthy have both the greatest money and the best access to information, they are able to keep piling on the wealth while the poor continue to fall further and further behind. Everything is scripted for them. Following their lead is more important than listening to the advice of experts. The East is making moves as the West hesitates. Silver continues to trade at a premium of 6% over global spot prices in Shanghai. Meanwhile, the disparity is growing. This isn't merely an anomaly in pricing based on area. Physical silver is moving eastward, away from Western vaults and into the hands of strongmen who aren't interested in selling, as shown by the flashing red light. Silver is being purchased in New York and London by arbitrage traders who then export it to Asia for a profit, capitalizing on the premium. However, there is a catch. The moment that silver leaves the harbor, it will never be recovered. As a strategic reserve for industrial usage and a hedge against currency instability, China has increased its physical metal acquisitions, including gold and, more recently, silver. Chinese solar companies, electronics makers, and organizations with ties to the Chinese government are acquiring silver at a rate never seen before. What is the outcome? A constant flow of goods that depletes Western stockpiles and worsens the shortage. Just as gold has been quietly migrating eastward for more than a decade, silver has been quietly migrating in the other direction. Silver has now joined the bandwagon. And it's not about buying at a discount. A greater change in global power is reflected in this movement. While Western economies cling to digital abstractions, Eastern economies are accumulating actual assets in preparation for a world without dollars. Although COMEX and LBMA continue to set the paper price, the East now controls the actual market that transports physical metal. If this pattern keeps up, Western investors may find themselves in a scenario where silver becomes unavailable overnight, leading to skyrocketing premiums and stifled supply chains. The metal will be long gone, stored in vaults halfway across the globe when that knowledge finally dawns on you. If 10% of gold investors switched to silver, it would use up all of the world's newly mined silver. This could indicate a huge pinch, He made the comment that while one billionaire probably won't do it, 10 would, the equivalent of exchanging 10% of gold for silver. You can tell it's coming when major powers like Saudi Arabia get involved. It piqued my interest. One thing I bring up frequently is that the average amount of gold owned by the public and gold-related equities is 0.5%. This is a phrase that I borrow from Rick Rule, who says that this number ranges from the Harvard Endowment Fund to Joe and Jane Sixpack. Surprise, surprise. GLD was being acquired by the Harvard Endowment Fund for $100 to $1.5 million. Very recently. As a result, numerous establishments have recently begun to stockpile precious metals. Take a look at Bass, I forget his last name, Kyle Bass, if I remember correctly, and see how little these institutions grasp the distinction between GLD and the actual thing. I assume he was managing a large hedge fund for the Texas Teachers Union or something like while he was in charge of it. His investment of over $1 billion in GLD was also confiscated by them some time ago, perhaps even a decade ago. Whether he has any intention of doing this or not, the fact that the Harvard Endowment Fund is purchasing $1.5 million worth of GLD indicates that gold and silver are gaining significant traction in the financial markets. The public is still blissfully whistling Dixie and doesn't really grasp the significance of this, but those who are extremely connected to global events are taking action and standing by their promises at this upper level on COMEX, sovereign wealth funds, endowments,